Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. Now I know I took a bit of a break over the past day or two. I needed a rest from all the YouTube videos that I'm doing for you guys. I just needed a break. But it's very good to be back on the box, showing you all the good stuff around market profile. So for those of you who are new to the channel, welcome aboard. In this channel, we talk about all things market profile and how to trade the markets like a professional trader. As I always say, lots and lots of people are busy trying to work out the best way to trade with candlesticks, all kinds of different strategies, whatever. The reality of it is that the success rate is still quite low, and that's because we're not visualizing the market the way we should be. Market profile is what 90% of professional traders use in the institutional world. Whether you're a hedge fund, whether you are well, the banks don't have prop desks anymore, but whether you are a bank visualizing the market for the purpose of market making, whatever you do in the institutional space, you're probably going to have a market profile chart on your screen. And that's because all the biggest platforms, CQG, Sierra Charts, and all the platforms, NinjaTrader, all the ones that tend to be used in a professional trading environment, that probably doesn't just trade equities, because if they just traded stocks, then they probably won't have a market profile. They'll be a little bit more focused on depth of market, order flow, and they'll be doing other things like hotkeying a lot of their trades in directly from a dome. So the reality of it is that you're just not going to get the same kind of what's the word? You're not going to get the same kind of interest in market profile if you're an equities trader. But if you're a futures trader, or you are a forex trader, whether you trade FX futures or you trade the spot market, whether you are a mini futures trader, or you trade the US 500 on a CFD, if you live in Europe, which in the United States you won't have access to these brokers, unless you're of course behind a VPN of something, or you have a second residency. Then you could probably get a European broker, and then you can get super tons of leverage, and then you can really enjoy, obviously it's spread trading, right? But so there is a bit of a spread there. So in my opinion, I think the cost of trading futures is lower. However, the capital outlay is higher because you have higher margin requirements when you trade directly with a futures broker that is based out in the US. So naturally, we understand due to competition, a lot of the US regulators wouldn't want European brokers running, MetaTrader, CTrader, whatever platform it is that they run, encroaching on the business of, offering 1:200, 300, 500 leverage, whatever, relative to the, either span margin requirements or some other margin method that is done by the CME. So all of that said, I'm going today to teach you a couple of things around market profile. We're also going to talk about positions. I've started to build in my positions again for this week. We did flatten a lot of our trades and to do a lot of stuff for this channel around intraday trading. Now, of course, don't worry guys, I am not losing any money showing you this. I am not, in any dire straits, because I've had to flatten my trades. I tend to have accounts that I run, and the accounts that I run for this purpose are not ones that I'm hugely concerned about. The idea about this channel is to be able to teach traders how to trade professionally with minimal amount of capital. So if you don't want to put a ton of money, but you want to be able to grow accounts, I'll show you how to do that, primarily for guys who are trading Forex or FX futures. And of course, I have a very holistic view to trading. And that is, I also sell option premium, which gives me more stable income. And then I also trade leveraged assets, because what I always say to traders is you don't want to be entirely dependent on leveraged assets like futures or like Forex in order to make your living. It can be quite stressful depending on what stage you're in your life, how much money you have. It can be very stressful. So it's kind of not the dream that we want to sell on this channel. That, you know, open a Forex account, put $1,000 in, you're going to be a millionaire at the end of the week, right? Or, you know, you're just going to have this huge personal freedom. I mean, not to say, of course, that you can't start a Forex account with $1,000 and, you know, make good money from it. I mean, the internet is full of stories, right? People starting accounts in $2,000 and going to $1 million. So it's not beyond the realm of possibility. But I think what we want to be honest about is that very few people are going to possess the skill set to do that. And even if you are going to develop the skill set to do that, you are going to need to do that over a longer period of time. So it's not something you're going to be able to open up your trading terminal and be able to do tomorrow, because I show you a couple of things here on YouTube regarding market profile. But what it will do, however, it should pique your interest sufficiently, so you'd want to maybe check out some of the stuff we do in our free Discord channel, so you can get a better insight on the kind of trades we do, how we do it, and our methodology, what we look at, and the whole flow. Or you might take an interest in a School of Investing, where you can get some of the courses that I offer here on Market Profile. We're just starting to build this out in terms of course framework. We had a lot more courses available on Udemy, which was a really good start for most traders, but we're now expanding to give people a broader look. We see there's a lot of interest in Market Profile. I have a lot more time to probably dedicate to doing that outside of my own trading, so I have to balance it. And one of the things that we're planning on doing is we're pushing out a really big options course, because what I do realize is that in the option space, there's just not enough good stuff. One, there's hardly anything on selling premium, which is the bread and butter of an options trade, or should be anyway, but there's a lot of stuff on long in options. Anyone who's gone long in option understands the challenges with time decay and everything else affecting options, which is why sometimes it may seem like a losing game. But obviously professional institutions have been selling volatility from, you know, the dawn of time, realistically. And, you know, you can grow an account, a fairly small account, if you, I wouldn't say even sizable, fairly small account, into, you know, a reasonable return, right? And, you know, and here when we think about selling premium, some of the returns can be quite staggering. You know, you could be making 120% plus annually, right? This is a big return on the equity space, right? Of course, there are day traders who, you know, probably in a percentage wise probably make a lot of money, but usually you find that with all kinds of day trading, it's not sustainable over time. Sometimes you're going to get, you know, fairly big drawdowns. The way people mitigate that is by scaling up, or scaling up on a strategy or an idea, right? And also having access to leverage could be really helpful. Like I said, it's just, we don't want to sell the dream here. It's kind of, I think, the pathway that we have opted not to go down. So everything you see in this channel, everything we do here is going to be largely real. All right, so let's talk a little bit more about market profile. And guys, thank you very much. If you stuck around and you're watching this video, then I'm pretty sure that I'm going to impact your life, right? I'm going to do something here. I'm going to show you something. There's going to be a dramatic change. So it's good to see you still around. Again, of course, if you've left, then you're probably not hearing any of this. All right, so starting with where we are. So we've spoken about the Aussie dollar before, right? So if you look at my previous videos, just go back to the beginning, you'll be able to see everything I've done covering market profile, positions, etc. And I normally put my piano on the screen, right? So you can get an idea of what I'm doing, how that's looking, and so on and so forth. Right, so one of the things I want to cover today is that we talk a lot about the profile. I always show you in a sort of whole viewfinder. So obviously my profiles here are weekly profiles, so they're representative. Technically speaking, if you think about it, it's like looking at a weekly candlestick chart, if anything, right? So obviously each profile represents a week. The beauty though about market profile is that I can see what took place in each of those candlesticks, for example. So how do we kind of quantify that? First and foremost, I can see what's called a value area, right? So this is the statistical value high and value low, right? So it's where the market was cheapest and where it was most expensive relative to that week. So we always look back in hindsight. So if I'm in this week, I look at the prior week to get a degree of value perception, right? So I can see here that we got value high and low. So essentially that's where large portion of the all the trades within one standard deviation of the mean took place, basically. And then we have what we call excess. So that's everything above and below the value area, right? So you can actually see that. And then of course you've got the open and the close price. So essentially you can see where the wick is, even though you can't physically see the wick, but you can see this is the open and this is the close. So obviously this is the high. So this has to be the difference between the high and the open, that's the wick. And we can clearly see from this wick, we had a lot of trading, right? So essentially it's what we call an offer stack. You have a lot of offers, obviously trading into that wick. And then obviously we have a beatdown. Now the key to market profile is being able to know when to execute. Now if I split this rotation, you can't really see that bulge, right? So if we condense that again, you can actually see this big bell curve shaped bulge, right? So technically speaking, if you're looking at a candlestick, you can't see any of this information. So that's the first bonus. Now if I split this and we look at it this way, so this is what we call a vertical representation. So what we're seeing here is what we call price analyzed over a horizontal plane, right? So we can see it horizontally as opposed to just vertically. So we can see what the price did. So essentially price at value or price at time, we can see what it did over a period of time. So that's also the concept you would sometimes see centered around volume profile, right? So when we had the volume, so that's basically composite profile. So that's basically all these profiles condensed and then superimposed onto one edge of the screen. So you get these mountains and dips and valleys. And what people would do is try and trade within the low liquidity areas and look for supports and resistance or breakouts in the high liquidity areas. Well, theoretically it's supposed to work, but it's an incomplete piece of data. What you really want to be able to see is the individual profiles so you can trade against them and obviously give yourself a bit more of an edge, right? And that's essentially what we talk about when we talk about market profile. So back to where I was. So when we look at the price in a vertical, it allows us to enhance our execution against what we can see is prior information. So for example, we can see the prior value was a little bit lower than it is now. So value perception shifted. So essentially this market has been valued upwards, and now it's technically a little bit overvalued because you can see here that value at that point was sitting very, very high relative to the highs of prior weeks. And also we can see that the market's response to that in terms of strong price action. So we can see this in Q period, massive push lower, and then we had a bit of a big back retreat. So usually most professional traders will understand the market's overvalued. We can actually see where the statistical benchmarks are. So this is new value, and if we get any rejection from new value, right, so if we pull this lower, this is what we call prior value, but it's new value as well, because as we moved upwards, we're moving into this value. We can see also some other bits of information here, which I won't get into this video now. It would be too long. I'll have to give you an entire lesson, more or less, on market profile. And of course, I got courses for this. This is kind of why I have them. But on the same token, I'm going to give you as much information so you can get the concept. So you can actually see that this general area here represents value that the market is just not happy with. They just don't believe that this asset class, which is the Aussie dollar, is worth trading within this value. So that value perception remains a little bit lower relative to prior week's value. So what we've had here is a massive rejection, right? We can see in period we went up, we held, and then we got rejected, right? So again, this is the point. Trade location is an important aspect of market profile, is because we've identified that the trade location is a little bit poorer because it's higher. We're trading at a weekly high. There's going to be a lot of stops up here, so we're going to get a liquidity hunt. There are really various reasons why it is not prudent to trade above this level, right? So we need to see cheaper prices. That's the point. So market profile kind of locks us into the idea that the prices need to be cheaper. So again, we can see that huge liquidity reject. So we know immediately that there's a good chance that we're going to play back into the prior week's value, because that is the most reasonable value reference that the market is going to be interested in, right? Obviously, it's not really keen on this one. It's trading slightly above 1, 2, 3, 4 weeks of value, and it's sort of retesting the 5th week. So generally, there's an interest in this particular value. So now we're moving down. We can see we had a break, slight change in the overall mood of the market, because we're now breaking, prior lows, for example, against the week. So it's looking quite interesting. But usually from a professional trader standpoint, if you're quick off your feet, now you're not always going to get your execution right, but if you're quick off your feet, you'd probably start to sell on the pullback in our period, and you'd probably go for stops on the high. Right, so it's about 50 ticks worth of stop. Now we're looking for a break into value. So here's where it comes important with targeting. When we think about targeting, everyone thinks about just maxing up the risk reward. Yeah, we could get further subsequent down weeks, but again, if we're looking to trade just across the week, so we're looking to do a swing trade, then we're looking to cover into bids. So usually we start to move into this value. The moment we sort of get sort of mid value, which will be the fair value from the prior week, we kind of want to cover that trade, right, and get out, because obviously we could start to see buyers come in and then this market could reverse pretty quickly. So to avoid being caught up in that, we can just get out. So again, that's one way we can use the profile to kind of give us a bit of an edge, right? So if I condense it again, you can see we were quite active dynamically within this particular profile, but then on the same token, we had a very good reference of the prior week. So there are a couple of things here. One, we're able to operate within a longer term viewfinder. So essentially we're able to look at a longer term time frame and execute in a shorter time frame window to get the best possible risk reward profiling for our trades, for example, right? Or to get the best execution relative to the longer time frame, so we can trade with the longer term participants. So in market profile speak, we call that the other time frame. So we can trade in the direction of the other time frame, so the larger participants. On the same token, we can execute with the intraday traders, which gives us the best possible price, right? Because we all know the intraday guys, they provide a lot of liquidity because of their in and out activity. So we can be able to buy large or sell large positions without actually anyone knowing, because realistically we're not going to move the market yet. So we're going to take advantage of that intraday trading volume or liquidity in order to execute much larger trades, right? So obviously that's what causes the market to move, right? So that, there you go. Anyway, so let's go back to the Aussie dollar. So again, we spoke about that last week, and we pulled back significantly to the downside. We broke prior lows, and obviously this is a good place for a liquidity hunt, and then we normally get a reversal. So what did I say to you guys is that just look for the evidence. If you start to see single prints, which we got the week prior, those could become very good entry levels. You just have to now work out what you want your risk profiling to be. Again, if we split last week, you can see we were dipping. Where did we see the most major response? Q and R period. We got positive rotation, right? So again, another concept in market profile is rotations, right? Positive and negative rotations. But again, I won't get into that now. But again, we've got positive rotation. That becomes a good execution level, either on the break or a slight pullback. And again, we're looking to cover the low of Q period, and let's see where this goes. Again, when we think about the prior week's value, we had a really big drop. I normally would look for a return to mid value just in case we get some response to the flow. So again, move into Z period, into offers, you want to start to cover, which would be about here, and it's also towards the end of the week. Again, we have some continuation, but now we spoke about the gap in value, right? So we're trading up there. Gaps mean efficiency, so they need to get filled. So we can see the gap in value, and most importantly, the market starts to get overvalued here. So again, even if we were to get some more extension, we don't want to chase, of course. We want to wait for the market to get cheaper, and that's where we start looking again for opportunities. So again, from my perspective, we're going to be slightly bullish on the Aussie, but then again, we're going to expect to dip back, and depending on how we sit, I would say at the moment with the Aussie, we're structurally bearish. So if we start to get resistance here, it becomes a good short opportunity until something tells us otherwise. I think if we look at the longer term structure of the Aussie, again, we could change sentiment really quickly to a bullish framework, but I would say that that won't come until we can actually take out the highs going back 4 weeks. So for now, we're still structurally bearish. Crude oil, we're definitely structurally bullish on crude oil. So again, any dips like this, for example, we're looking for bull runs. So if an example was from last week, again, I split the profile for this week to kind of keep an eye on crude. But again, an example for last week, we can see that crude dipped. And again, we took note of the bid stack. Obviously, again, competitive activity, we traded slightly under. And where did we get the biggest reaction from the downside? And that was P period. We had a rotation change here on Q, slight dip back on R, and then a close up on S period. So even if you're a bit iffy about getting long roughly about here, stops under P, you could have got a better fill at S period or the close of S period. Either way, your execution would have come around about here, right? And again, as you can see, we're pushing a little bit higher. We had a slight gap up. Again, that's one of the reasons we cover in the week, because again, what happened? We got bought. We started to go back into prior week's value, which is a good place to cover your trade. right? Again, when we think about the structural position of crude oil, what we really want to see is these couple of weeks high growth. So we've got a strong offer stack here, which is where a lot of the sellers are lodged. So if we can start to see some good price responses on the lows, we've got higher value perception, no real shift at this point in the week. So we're just paying attention. We've got rotation already into the J period low. So if we split that, we're already rotating it out, which is a good chance that we're going to get continuation to the downside. So basically, we haven't seen a major reaction that would want to make us buyers. But because we're structurally bullish, I don't necessarily want to be in a short position. Right? Again, you could short it here. It could be a value trade, but again, you can see that there was interest to buy this up. We've got a competitive buyer here. We've got a competitive buyer here. We've got a competitive buyer here. Clearly, the market thinks this low is an interesting low and it doesn't want to be there. So why force the issue? So again, the S&P 500, we did say to you guys, structurally bullish. We were long on this for a while. We covered that trade. It was one of the trades we flattened out to do some intraday stuff in order to give you guys some perspective. Again, we're going much higher. We did say that we expect 4,300 on the index, and we've actually traded that last week, and we traded that again this week. I think we're going to go a little bit higher, but what do we have in front of us, guys? A gap in value. We're structurally bullish. The question is, have we looked at the structure on the S&P for longer term? Again, I won't get into how we look at structure now, but that's an important factor to know if we are macro bullish or macro bearish. We're macro bullish on the S&P. We're going to hit a high at some point. We're going to dip back for sure. But again, we just got to be mindful. We're in a bullish framework. So again, look for a gap fill. Look to trade anywhere into bids. So if we start getting gap fills and then holding good responses, it will pretty much enhance the long side. Right? So we can clearly see that we're long-term bullish on the S&P. Right, so gold, again, we're trading into new value. We're setting up for what I think is a value trade. One of the important aspects here for gold is that we had a rejection into the value. So you can see that here. We got rejected at this value. So generally, there's a separation between values. So we got the values on the upside and the values on the downside. Obviously, the market seems to be unimpressed with prices under 1938, which was reference to prior week's value, and then we can see pricing here. So most professional traders will have their stops under 1900 on gold, looking for a push. We had a nice little dip here. We have a competitive seller here. So the chances of breaking this level are pretty slim. So the main offer stacks is in here at 2030. So we might get a bit of a push up this week to close off. We've got a nice balance break. You know, we could get that. If we fail, then we're going to go to the downside. Now, I have a long position on gold. P&L on the screen, right? So we're going to keep an eye on this through the week. I'm expecting an extension, probably into the minus development, which is roughly about 1997, 98 an ounce, which is what I'd look to cover. But I'm well mindful that we also have value high resistance levels holding us back. We've got offer stacks, so the chances of us breaking above the 2K level is actually pretty slim. Again, if I'm wrong on this trade, not a problem. This is a really tight one, so I'm not really too concerned. We'll see where this goes. But again, there's a good chance where we are that we do at least a value trade, and then if we're going to struggle, we're going to struggle from there. If we can take out the highs, the 2-week highs or 2-week value highs, then there's a good chance we're going to trade up to the offer stack, and then we start to see sellers from there. So this is one to keep an eye on. I think the best execution, most professional traders would have been long earlier. Again, we were intraday trading that week, so generally speaking, it was just a passing mention that we could be much higher in gold. But again, that's where you'd look to execute just on that rejection here. It was a really good level, key weekly lows, and you would have had some really stellar trades across the week for sure. So again, if we split that profile, again, you can see that huge rejection in I period, and then we traded value, fell off again, and then now we're going up again. So again, we're seeing a pattern develop, so to speak. So anyway, I'm long on gold. We'll keep an eye on this one. Cable, similar story. I think we are short-term bearish on cable. In the longer term, I'm expecting a bullish play. So once again, any kind of reactions, we have a gap in value here which needs to be filled. We've attempted it twice now. It's got to fill at some point. So expect a really radical move to the upside at some point with cable. When we look to the downside, we don't have too many gaps. This market is relatively efficient going to the downside. Dollar yen, we are structurally bullish. We have been. It's again, we're getting to the end of that, so I'm very conscious here to say that we could get a big drop off on the dollar, and we have a major gap in value which needs to be filled. Dollar CAD, huge gap in value to the upside. As you can see, we've traded the offer stack. We said that last week, so check out the other videos, that potentially we could hit that offer stack, pull back out, and then we'll trade back into bids, and then we'll find support, right? So this is kind of where we are. So I think it's really tough for dollar CAD. I think we're structurally bearish on this one, so we'll look for an opportunity for a gap fill if you want to get short this. We spoke about Bitcoin, and I was saying to everybody that the G period print, right, back in a value high offer stack, I said this was a bit deceptive, right? I like to see Bitcoin lower, and usually 25k I'd get interested. And we did speak about that last week, and we can see this exactly playing out today. So if you listened and you're a little bit patient, you've got cheaper prices on Bitcoin, but I'm looking for even cheaper. Bitcoin is a real mover. So again, you just want to look for that strong reaction. If we trade into bids 25k, if we trade slightly under that, then I would make the assumption that we're going to go much, much lower, and we should look for a rejection in the K period minus development. Sterling yen, again, structurally bullish on this one. I don't think in fact, it's one of the assets I'm most bullish on. Is the yen is going to weaken, right? So the yen is incredibly weak. We know that monetary policy has impacted that a lot. So we're seeing that. So again, any strong dips on GBP, JPY should be a good buy. Again, we have a nice little bid stack here, so we need to just pay attention to this one. I think we get some upside continuation. The Kiwi, this is a tough one because we've had a huge dip. It was structurally bullish last week. We were like totally wrong on this one, but we had a huge dip, big response. We haven't been responding as strong as the Aussie dollar has, so I'm not necessarily extremely bullish on this one. So I think we're structurally bearish, and we have a strong minus development here in end period. So again, we could, we never really breach this within a week or two. So we need to see some real upside settle before we can even think that we're going to get a breakout to the upside. So I'm not really optimistic about the Kiwi. Anyway, guys, I think that breaks it all down. It's been a pretty long video this week. I really wanted to get into the meat and potatoes of how we use the profile. So again, like and subscribe the video so that we can really get this stuff out there, so people can see what we're doing, appreciate it, and you can learn something along the way. Once again, we got a free Discord. If you want to see what I'm doing, have a chat, whatever, pop in the Discord. It's a clean environment. You probably learn a lot as well. But guys, till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?